Ohmies, welcome to another interview of the week. This week we have a very special guest with us, none other than Kazemian of Frax Finance. And as with me, as always, is Dropkickdarren. How are you going, Dropkickdarren?
I'm well, Mark. I'm super excited today. We have a Goliath in the space joining us, fresh off the plane back from Dubai, ready to start shipping. How are you, Sam?
I'm great. Thanks, guys. It's a pleasure to be on.
I kind of want to jump straight into the origins. Where did crypto start for you? I know that you were one of the earliest Doge miners out of your dorm room at college. Can you kind of walk us through your crypto background, how you came to be in the space and down that kind of line?
Yeah, exactly. Sure. And then, you got that totally right. It's been a long time since the Dogecoin and the altcoin mining days. So I got into crypto around 2013, 2014. I founded my first startup, Everpedia, which is kind of like the decentralized crypto kind of encyclopedia, in 2015. And we launched a token in the ICO era, and Everpedia is doing really well, raised over 30 million. And actually, I'm trying to get them to do Olympus PRO, so the IQ token that's on Ethereum and multiple chains. I'm trying to kind of sell them on Olympus PRO to get some ETH and other kind of liquidity, for that token, which should be cool if we can get them to get on the next cohort and stuff.
Very smart move, Sam.
Yeah, no, I'm an evangelizer. I think they're totally going to do it. And yeah, so after Everpedia in 2019, kind of before the word DeFi and all this stuff was, a really big thing, I kind of started thinking stablecoins and, financial stuff will be kind of the next big thing. And, thankfully that was right. But the design for stablecoins were not really that advanced, right? There was the basis proposal. They never launched it. Maker was the only on-chain stablecoin that was seeming like it was scaling and working kind of as intended and stuff. And we kind of came up with this fractional model with Frax, and it's evolved a lot since we launched it. And one thing I'm always really kind of proud of is we launched in December 2020. And since then, we've held a perfect peg, and we've never broken our peg. And it's the first partial or fractional or algorithmic based stablecoin, whatever you kind of want to call it, that is, I think, as far as I know, hasn't ever broken its peg. I think Terra's also done really well, so credit there to I.O.W and all the lunatics. And I think we're kind of the last men or last stablecoin standing in the algo stablecoin space, sort of. Faye is also doing extremely well. I love those guys and the team there. I think they're a little bit more of an over-collateralized kind of DAO model these days. But one thing I'm super proud of with Frax is we have one of the most unique, if not the most unique mechanism and view when it comes to stablecoins, and it's been very successful. So that's been exciting.
Very cool. You got to see empty set dollar, dynamic set dollar, the basis cash. Did you look at them and were you like, oh, these are just not going to work? Did you think they might work or?
Yeah, I mean, I think I had an intuition about what was kind of going to happen. And thankfully, I was right. And we built Frax around improving all that stuff. One of the main premises that I always said, and you can see on Twitter and everything from last year and stuff, is you can't have a stable coin without a balance sheet, right? The first basis and ESD designs and all of them, it's just this kind of circular, no balance sheet assets at all. And we were just how exactly would that even work, right? And what's interesting is people went through that whole experiment and realized it actually doesn't work, right? And we originally had the idea of, we think that a partial collateralized kind of a fractional system will work, because our intuition was kind of the same view of central banks. If people have, if people know the history of central banks, they target the exchange rate of their cash, essentially of their currency, rather than having redeemability against stuff, right? Because the history of central banks are like, first, everything's gold backed, right? You can literally redeem the cash against gold, right? You could actually, there's redeemability, right? And then the next phase of kind of central banking was like, okay, you can't redeem it for gold, but we will try to keep the exchange rate to some kind of, gold exchange rate, maybe, I don't know, like $1 an ounce or whatever it was, right? And so the thing is, you couldn't ever go to the central bank and actually go get a piece of gold from their vault, but the actual central bank goes and does open market operations, right? A term that people are now familiar with, to keep a exchange rate to gold or whatever their national policy was. And the cool thing about that advancement in like financial engineering was like, you don't have to actually keep gold anymore in like a vault. You can actually have other assets on the balance sheet as long as you're using those to buy and sell the currency on the open market to make sure the exchange rate's the same, right? Like you can have bonds and other kinds of like securities and assets there. And as long as you market make the currency's exchange rate to gold or whatever your target is, then that's how you keep stability. You actually target an exchange rate rather than redeemability, right? And so that was like the next phase of central banking. And then the last phase of central banking was, instead of targeting gold, you actually target a basket of consumer assets that you want to, incentivize the economy to produce, right? Things like food, things like, electronics, cars, heavy machinery, things like transportation, things like that.
Very cool. I think I can see the AMOs, which we'll talk about a little later, I'm sure, as there's open market operations. So maybe you can just take us through how Frax got started. How'd you meet Travis? Was he working with you, the CTO? Was he working with you at Everpedia and you both came across? Or how did that kind of start? You meet everyone on the team and kind of start to get going?
Yeah, so Travis and I worked at Everpedia, and he's like one of the best devs I've ever had the chance of meeting and interacting with. Jason, who's another core dev and on the kind of co-founding team, is also a really good dev. He's from UCLA, which is around the area. It's funny, all three of us are from UCLA, but we didn't go to school at the same time. So it's actually totally independent how we met, and coincidental that we have the same alma mater. So that's kind of a interesting coincidence. But the team now is actually, slowly expanding and becoming more and more decentralized and active. As you guys probably see if you're in the Telegram and community, like there's other people putting up governance votes. There's other people doing economic modeling. We actually have a really smart guy named Dennis. I've never personally met him, but that's kind of the beauty of DeFi and crypto, is he's really brilliant at figuring out monetary policy and essentially creating and proposing a lot of different ways that the AMOs can operate. It's growing pretty quickly, right? And we're really, we're really friendly to people getting involved any way that they want to. It's just the same kind of vibe as Olympus and a lot of these really welcoming DeFi 2.0 projects.
Sure. Before we get on to DeFi 2.0, maybe you can just tell us about the first time you discovered Olympus and what your kind of reaction was, and then kind of how you came to become a partner.
Yeah, actually, it's good you asked that, because I remember the first time I found it, and there's just one token, right? It's Ohm, and you can stake it. So then the tokenized version of staked Ohm is S-Ohm, but I didn't really get it. So instead of actually making like a rudimentary judgment of this thing doesn't make any sense or something, I just left it. And then I just didn't even look at all at it. And then I looked at it again, and I started to kind of understand what it was and what the bonds were doing. And at first I thought that maybe later there might be like a price ceiling, right? Like there'd actually be like a price band and stuff. And then after a while, I actually thought maybe there doesn't need to be. This thing can actually be a really unique primitive. And once I started talking to Zeus and we had a few calls and stuff like that, I think he really got Frax and how it worked. And so there was just this mutual respect and understanding. He's a super, super smart guy. And it was, we saw some really cool opportunities. And I think the main thing is we both understood the unique things about like what each other were building. So that's what really got me excited.
Very cool. Then maybe we can discuss kind of what's coming up for Frax, and that'd be something interesting for our listeners. I'm sure they're all keen to hear. And if you've got any alpha, maybe you got a little alpha leak for us, that'd be cool as well.
Yeah, of course. So first, kind of to review what Frax V2 was that one of the main things we understood from developing like algorithmic stablecoins is you have to target the exchange rate of the stablecoin, right, at a peg of $1 a token. And what we realized is that you can print stablecoins, right, and increase the supply as long as you can contract the supply just as easily, exactly the opposite at other times where you have to actually stabilize it, right? And we thought of what's the abstract concept of that, right? And we came up with these kind of algorithmic market operation modules, right? And we call them AMOs, and they're kind of our thing that we do really well is that when we design like a market operation strategy, it's kind of like a wire and volt, but instead of for yield, it's for controlling the supply of Frax in and out of a certain protocol. And so like just as easily as we can expand the supply somewhere, we can contract the supply as well to do the exact opposite market operation. So like I'll give you an example, right? So we have a curve AMO, which basically always mints Frax into curve if the price is above $1 there, right? And it gets LP tokens when it mints new Frax and then deposits in there. And if the price of Frax is slightly under $1, then it uses those LP tokens to withdraw the Frax and then burn it, right? It contracts the supply of Frax. And then so while it has those LP tokens, it can go deposit them somewhere to get yield and essentially make the protocol profitable. You can kind of abstract this to literally anything, right? And as long as you have a good structure for it, for example, another thing we do is we mint Frax into fuse pools, and we basically make sure that there's Frax to be borrowed. And then if there needs to be contractionary monetary policy, then we take out any remaining Frax, and it increases the interest rate and gets people to repay their loans and take out Frax from the open market, right? Mm-hmm. We started kind of doing that in Frax V2, which was around April, May-ish. And I think now what's cool is I think it inspired a lot of people, right? Like if you look now, there's a lot of people minting kind of stable coins in Fuse and realizing, wait, we can kind of do that too in our own way, right? Like Faye does that. I think there's Dala from Inverse Finance, like they have like DAO votes or something that mints their stable coin there. It's a little different. I think everyone's kind of done their own vision, but the abstract concept that we kind of started was like the next evolution of monetary policy is basically controlling the exchange rate of the stablecoin on chain, right? Just like how a central bank controls the exchange rate of their national currency. And so we kind of have this model that we can kind of deploy everywhere. So like there's the Curve AMO, the Fuse AMO, and there's a bunch of other stuff. Like we can deploy idle collateral and minted Frax in Uniswap V3 and then rebalance it to take out the Frax and stuff like that. And the interesting thing is right now, like we essentially have to poke them and then kind of deploy them in order and things like that. But one of the things I've been thinking about for Frax V3 is that what if you actually in real time let people who are staking FXS, which is the Frax Share Governance token, actually control the monetary policy, right? Like the same way that people stake, VECRV, right, the Curve Governance token, and kind of control where the rewards go in Curve. You can kind of take a similar abstract model and actually allow people to vote where the money supply expands or contracts, right? Because we have a stable coin that the protocol is really good at keeping stable, but we don't have the same kind of gauge system for where it actually goes, right? Where kind of the money printer goes according to what like the governance token holders actually want. And I think what's going to be really, really cool that no other, protocols even tried or thought of is for V3, if VEFXS holders, which are the stakers of the governance token, can essentially vote on, okay, the supply of the money supply needs to increase. Where does it go? Does it go into the fuse pool, Tetranode's fuse pool, where a lot of OMIs can borrow dollars for cheap, right? They can borrow Frax and bring down the interest rate there. Does it go into the Curve AMO, which needs to expand the supply, and then that lets the LP tokens earn some yield through convex or something? Does it go, anywhere else in all of these other places that we can, the community, and we can deploy new algorithmic market operations modules? And so it's almost like this hive mind of monetary policy, right? These expansion and contraction votes. And I think that that's kind of where kind of DeFi 2.0 is going, right? Like O.W, the thing that's really interesting about it is that O.W holders can vote and get together and be like, where do we direct the O.W liquidity, right? What bonds do we buy and accrue balance sheet assets, right? Things like tokamak, which are kind of really interesting, that are up and coming. And they basically are an abstract concept of deploying liquidity anywhere, right? The token holders get to decide, like in this formalized mechanism, get some deposits of different assets, right, in these tokamak reactors. And then the toke holders exactly vote on what to do with them. Like, how do you deploy them? How do you match them to another reactor pair and then deploy the liquidity? And it's all in the kind of ethos of protocols deploying capital, controlling where their assets are as kind of a coherent entity. That's kind of what my Twitter thread the other day was about, and how protocols are kind of emerging as a emergent entity, right? Like an actual, firm. People call them DAOs on chain, right? But the main idea is that instead of just a bunch of incentive mechanisms loosely coupled, there's actual complex economic coordination going on, right? And so what we're trying to do at Frax is basically do complex economic coordination of monetary policy, right? To stabilize a stablecoin on chain, exchange rate of one token, $1, right? And get people that are, holders of the same token distribution, right, of one governance token to expand and contract the supply properly and essentially control this kind of algorithmic central bank.
So it's like the keys to the money printer. I think I've seen you say that somewhere before.
Yeah, right. Because there's a lot of these different memes, right? So, like, for example, the convex token CVX, right, is like the keys to the Curve inflation rewards, right? Because they control so much of the VECRV supply. So if you hold a bunch of convex tokens, it's kind of the keys to where the inflation goes, right? But no one is really the keys to the stablecoin money printer, right? And it's kind of a funny meme because it's the classic money printer go burr, but you can actually hold a governance token and become part of that meme.
Yeah, it's super, super powerful. It makes me wonder what the second order effects are for, say, like this, automated monetary policy on the Frax side, and then this, kind of cohesive protocol hive mind in tokamak. Like, I mean, you guys it was a bit of a, intense last 24 hours in the reactor race in order to, for Frax to spin up a reactor. First of all, tell us a bit about that whole reactor race situation, and then also what are the implications of a system like tokamak and FRAX, and also how Ohm kind of, how these three systems kind of tie into each other.
Yeah, so I actually really like the tokamak design. Carson and the team over there, and those guys are some of the smartest guys when it comes to thinking about abstract liquidity and like where like it's going, and the designing of like liquidity, not only just incentives but deployment. So tokamak is super exciting. I'm actually I can't wait until our FXS reactor goes live. The cool thing is when we won, and FXS was number 1 out of 42, and that actually surprised a lot of people, because the first thing I did actually when looking at how the core competition was working, so for people that didn't follow it closely or haven't looked it up, there's 42 protocols. Olympus was one of them, and you guys won, which is super exciting. Frax came in first, and there's Sushi, TracerDAO, and Alchemix, I think were the other ones. And the first thing I saw was that people can change their votes around, right? And the competition rules are like really unique. People can reallocate their votes. They can change stuff around even until the last minute. So I was running around the whole time trying to rally like community people that held a bunch of FXS, that also held a bunch of TOKE, and then posting about it. But one of the first things I actually did was kind of wait a few days, because the thing I didn't want to do was get a bunch of votes and then the last like 48 or 72 hours or something, other people have, say super exciting stuff, and then, everyone changes their vote, and then, it's the classic, you got to finish the race, right? It doesn't matter who's leading the competition in like 90% of the actual competition. It's the last 10%, and whoever crosses the finish line actually matters, right? In the history books. So the thing that I did is I actually kind of waited. FXS was, I think, like 4th all the way down to like 9th or 10th, most of the competition. But I think in the last 24 hours we're like 5th, 4th, 3rd. And then I think it was the last few hours actually that we were like 2nd and 1st, when everyone was changing positions and stuff. So a lot of people were surprised, but it was like kind of planned in terms of, making sure that we tweet about it the most, get people voting the most in the last, 24 hours, because that's what really matters, right?
Definitely, Sam. Yeah, it was so fun to watch. It was like a little game that all of DeFi got to look at. I think lots of people will be looking at it and saying, how can we do something like that? Because attention is like the sort of biggest draw card that you can have for your protocol. Because if no one's looking at it, no one's going to buy it, right?
Yeah, 100%. In fact, that's actually the thing that was going through my mind, and kind of what got me to, think about the V3 design for Frax. Is I kind of want the monetary expansion, like the money printing stuff, to be as interesting and like attention filled as that. So they did a really, really good job. So hats off to the tokamak guys and Carson and everyone there. And I think that, they really, really did a great job with governance and how everything was working. So basically, the V3 design for Frax is trying to capture some of that magic, right? And I think more governance votes being lively about that stuff is really important.
Very cool. So tokamak is like a giant AMO with extra assets in it. Is that how you see it?
Sort of. It's kind of like a liquidity, AMO, like market operations. They don't have their own stablecoin, right? That they like hypothecate against collateral. They're kind of a liquidity hive mind, right? And they don't have to keep like the price of anything stable, right? They have to find the most interesting and profitable places to deploy their capital. It's almost a little bit like a quasi market making hedge fund hive mind kind of thing, which is super cool. I think if they basically, team up with something like Frax, where we can print a lot of money, right? Like stable currency, and they essentially kind of deploy it with their, hive mind of like liquidity directors and figuring out what to do with it and stuff. That would be a killer combination, right? Because they will be really, really good at finding the best uses for the capital that they get allocated. And Frax is really good at expanding and contracting the supply of a stablecoin to make sure that the purchasing power is stable, right? That the price is always $1. So it's almost like specialization of kind of monetary policy. And that's like really cool to see, right? And when we actually are able to get a Frax tokamak reactor and not just the FXS one, that will be a really cool moment, because then they'll be able to get a lot of algorithmically expansion, dollars to allocate.
Yeah, super exciting thinking about all the things you could do. You've kind of got a little bit of backing behind each FXS because you've got, nearly $7 million of OHM. Is that money in your treasury, or the CVX that you have in there from expanding supply into the curve pools? What is happening with that kind of money? Is it being used to back Frax, or is it kind of in a treasury and we can consider that to kind of back each FXS? Are you kind of moving in a little bit of an OHM direction? Maybe you can tell us about what's going on with the treasury and what your plans for that in the future are.
Yeah, that's actually a good question, because I think people are a little bit sleeping on how fast kind of Frax's balance sheet is growing. It's actually growing, as maybe not as quickly as OHM, but it is growing extremely quickly compared to most, DeFi protocols. And what we do with the treasury is that a lot of this stuff is in AMO contracts, which means that they can be used immediately to, if we need to, keep the exchange rate of Frax, the stable coin, stable at $1 if we have to. But like, for example, we don't ever intend to sell the CVX or the OHM or the strategic assets that we have, because we think it's really important, right? I think we're the largest protocol owner of CVX out of anyone else, as far as I know, for example. So we have a very big seat at the governance table of that. And I believe we're also the largest protocol holders of OHM. You guys correct me if I'm wrong. I think we hold about, $7-8 million worth of OHM. Do you guys know of anyone that holds more?
No.
Not anyone in that size. I know a few protocols own I think maximum otherwise is like 1 million. And then some others are sort of getting a Frax pair into their treasury. But yeah, please keep going, Sam.
Yeah, so our balance sheet is used for both strategic purposes and for keeping the exchange rate of Frax at peg, right? And the thing is, there's an order to, how we would deploy some of these things, right? So for example, we don't intend to ever sell OHM or CVX because they're very important to our balance sheet. But they are all backing Frax, and then later the FPI to keep the exchange rate the same, because they're in these AMO contracts, which essentially means they can be used to contract the supply of Frax, or when we were in our OHM accumulation phase, print Frax to acquire OHM, right? That's how we actually acquired a lot of OHM, which has grown. So we're able to essentially expand our balance sheet and then contract the balance sheet to contract the supply of our stablecoin if we have to. And what's cool is that'll be formalized too, right? And in Frax V3, FXS holders can vote, okay, what's the order of all of these AMOs, right? Do we first contract the supply of Frax on Fuse or Curve or Uniswap V3 to keep the peg, or do we do something else, right? So all of the balance sheet assets are backing Frax. They're backing our stablecoin. And so that's why the peg is so solid, because people can see they can be rapidly deployed to keep the exchange rate, at $1, just like kind of a central bank.
They'd have to burn through all those assets before the sort of peg would lose its peg.
That's correct. Exactly.
Yeah. All right. I hadn't realized that. And so the CVX is in a pool, or is the OHM staked? I'm not sure.
Yeah. So the OHM is staked as SOHM. The
Okay.
CBX is a little different because in order to partake in CBX governance, you have to stake it for a longer amount of time. So the liquidation of that is not instant. So it would probably be closer to like a last line of defense. But if it came to that, yeah, we can unstake the CVX, and once it's unlocked, sell it if that happened. But hopefully we never do. And so far it's been such a rock solid peg and a perfect peg. But that's kind of how Frax works. So the market can see that, right? Like if you look at the smart contracts, you can see that they can be liquidated if necessary. And I think that that's what kind of gives confidence to Frax, even though it's like 82 or 83%, fully backed, which isn't 100%. You know that there's a really, really large balance sheet of assets that can be used to keep the peg rock solid, which has worked really well.
I kind of had two questions about the AMOs specifically. One is, can anyone or any protocol propose a new AMO? And then also, do the AMOs themselves, like obviously each specific AMO plays by a certain set of rules. Is there like a cross communication? And so it's like if there's, something needs to be done in one, will that just operate on its own and won't affect the other strategies? Has there ever been a consideration of having this kind of cross communication, this connected system across all the different market operations?
Yeah, so there's a lot of them, right? And so right now, anyone can propose anything. In fact, right now we want to intake a lot of RAI, which is the reflexor stablecoin, instead of holding more USDC. So there's like a governance vote for a RAI AMO. Anyone can propose them. In fact, I don't think I actually didn't start that one. Stefan and the reflexor guys did. So turning them off and on are governance decisions, and the core team deploys the AMOs to spec. Then right now, the order of them is managed by a core team and governance and an MSIG, right? Which is exactly what we want to change in V3. We want to have them be done in real time by FXS stakers, right? VFXS holders. And so we can do that if there's basically a system of voting similar to gauges where you order the weights of the AMOs. Right now in Frax V2, they're just governance votes for turning them on and off and new ones. And then kind of the order of them are managed by the core team and M6.
Okay,
Very cool.
That makes a lot of sense.
Maybe we can talk about the future of any partnership with them. We are on a Olympus podcast after all. And maybe you can tell us about how the Olympus Pro is going for you guys.
Yeah, of course. So always, like I was saying before, always really interested in expanding our cooperation, because I think there's just so many gigabrains in both of our communities, the Fraximalists and the Ohmies. I really think that with the FPI, we should partially back it with Ohm. I think it's a no-brainer. In fact, one of the things I wanted to talk to Zeus about as we get closer to that is how that would work. We're also in the first cohort of Olympus Pro, and as you guys know, I'm trying to get the Everpedia guys to also join in the next cohort. So, suffice to say, we really like it, and I think it's a really, really cool, kind of pro-managed, protocol service that I think a lot of protocols should use. It's basically very efficient. It's very DeFi 2.0 like, right? And I think it'll be really big. So I can't wait for you guys to scale it, see who else is next in the cohort. Hopefully the Everpedia guys. And yeah, I mean, everything so far has been really great.
Thanks, Sam. So we know you're working on Frax Price Index. Where are you up to with the crypto native price index?
Yeah, so I think that's honestly the second innovation that we're developing that's kind of as important as the AMO stuff, which is like, algorithmically targeting an exchange rate, right? Like a price. The protocol is only going to have two stable coins, the FPI and Frax. And, when we kind of designed Frax and it was working and things like that, people were asking us, wait, can you just do this for a lot of synthetic assets? Can you do this for like, fractional gold price and like, fractional like euros or things like that? Kind of like how synthetics is like a platform for many different synthetic assets. And I just said that you technically can, but the only thing that kind of Frax is really interested in is money. And we're not trying to be like a platform for synthetic assets and stuff. So the FPI is the only other stablecoin that we're working on. The unique, crypto native CPI with a, completely, new unit of account that's purchasing power stable against a basket of, consumer items and crypto native indices. That's actually coming along really well. It's kind of difficult to design the staking mechanisms and things like that for it, because on one hand, if you think about it, like imagine if, for example, Ohm was targeting like some inflation rate and CPI index at the top of its kind of price band. It wouldn't be able to offer the hyper growth 8,000% APY that gets a lot of people excited right now, because 8,000% is way above inflation, right? It's way above that. And if it was just like 10% or something like that, it wouldn't be that exciting. You can kind of get that kind of yield. And so what we're trying to do when designing the FPI is come up with a new stablecoin that is a completely new unit of account that doesn't, peg to the dollar and has a CPI based peg, but is just as exciting and interesting and, has the same kind of, get into this and get involved feel as Olympus DAO, right? We can't really do that with a really large APY, but we have some really cool designs that we're tinkering with to basically make it just as exciting and interesting while, allowing people to have a pegged stablecoin, right? Like the thing that is different with Ohm is it's backed, it's not pegged. So there's a RFV and floor, but Ohm can go, as high as possible, which is really cool. And it's not really targeting kind of a CPI component. So one of the things I was actually thinking about was, part of the FPI could even be backed by Ohm, right? Because one of the main things that, people talk about with Ohm is that it's like a reserve currency. The main thing is that it's a reserve currency, meaning that you can hold it and you could see the actual really high growth. But since you don't actually know whether holding Ohm is going to, increase in price or change in price at the top, and keep stable to a basket of consumer items like food, healthcare, cars, all this stuff, it's a little bit more difficult to save and plan with Ohm, but it makes it a really, really good backing asset because you can see the API growth. And the API growth, at least for the foreseeable future that I can kind of see with how fast it's growing, is definitely going to be significantly like higher than inflation. So it's like very inflation resistant.
Ooh, where do I start? I have so many kind of questions on how Ohm could look to back, an FPI. But I was like more interested in, how do you kind of find reliable data to kind of track a lot of the off-chain stuff when you're kind of tinkering and building this, FPI? Have you kind of found it difficult to kind of track a lot of the CPI metrics in the real world, or is that something that's like pretty straightforward?
Yeah, so that's a great question, because a lot of the things people say about the CPI is like inflation is way higher than 2.5, and I actually believe that, right? I actually am one of the proponents that think that that's correct, at least for right now in the economic environment currently. But the cool thing is that if we're bringing on the classical CPI on chain, and we're actually working with Chainlink to create a custom CPI oracle for that, just for the FPI, we can modify it on chain with governance and just different algorithms to actually adjust it to what the users and people that actually want to use FPI think is correct, right? So if people have a problem with the current CPI and they want the FPI to have a different exposure to different weights of consumer items, we can actually do that on chain, right? Because it's an entirely new unit of account. We don't have to kind of passively take the Federal Reserve's monetary policy, which is really, really powerful, right? Because all the dollar pegged stablecoins, FRAX included, right? DAI, all of these things, they're essentially passive takers of the Fed's monetary policy, right? You just follow what the Fed does and make sure one token equals $1, right? So effectively, you're just following everything that the Fed says and taking it at face value. But the FPI can actually adjust and change depending on what people that are using it actually think, right? We can change the indices. We can have crypto native indices. One of the cool things that I think is really important is I think following the average kind of gas price of Ethereum and, maybe even like Bitcoin or something is really important, because just like how, the internet is something that keeps your standard of living the same, and people always use the internet. They need electricity, they need oil and gas prices and things like that. I think that for the 21st century, being able to settle value across the leading distributed ledgers are, the prices of those things are just as important as the price of gas, like literal gas, physical gas, right? And so we can add stuff like that to the FPI that the CPI doesn't track.
Yeah, that sounds super powerful. You've got FPI, you've got AMMFs, you've got the decentralization ratio. Where can we? What's over in the water in LA? Like we need a sip of that, because you're too creative on Twitter. Like, can you go into depth on kind of the automated money market funds and this kind of decentralization ratio that you touch on Twitter? I know Frax at the moment, from inception, obviously it was you needed a lot of USDC to mint Frax, but obviously with FXS absorbing a lot of that volatility, it's now starting to become quite decentralized. So do you want to kind of touch on how Frax is moving, the decentralization ratio of Frax is increasing, and then also, what a automated money market fund is from your perspective?
Yeah. So one thing, that was always a common and justified critique of Frax is when we started, we were predominantly backed by USDC, right? We just intake USDC as collateral to try to keep things simple and make sure kind of our stability mechanisms and our theories actually worked without, having the collateral be very volatile. Recently, what we did is we developed this way of measuring the decentralization ratio of actually any stablecoin, although we use it mainly for Frax, to see how much of a stablecoin's value actually comes from fully permissionless and decentralized collateral. And the way we do that is actually pretty simple. It's like a recursive function that basically looks at what assets a stablecoin protocol or anything like I.O.W or Frax or DAI and stuff hold, and track it all the way down. So for example, Frax is backed by some USDC, so that value is treated as 0 when calculating the decentralization ratio. It's also backed partly by Curve LP tokens, right? And what we do is we actually break down the Curve LP tokens to the underlying pieces. So half of the Curve LP token is Frax, right? So we remove that because you can't back yourself with more Frax. So 50% of that is gone. Then the remaining 50% is 3CRV, right? Which is Curve's 3 stablecoins, DAI, USDC, and USDT. Well, 66% of that half is already not decentralized, right? So we actually remove that as well from the decentralization ratio calculation. You're left with DAI, and then DAI itself, again, if you recursively follow what DAI is backed by, is around 60% USDC, and then about 40%, over collateralized ETH and over collateralized crypto, which is decentralized, right? So that 40% of 1/3 of 1/2 of the Curve LP tokens is decentralized value, right? If you recursively follow all of the assets down to their underlying. And so we actually count that as decentralized value backing Frax, but not the other pieces. And you can do this with literally every single other asset, right? So for example, ETH is super easy. It's 100% decentralized. We have some ETH, so we count that value as collateral, right? If, for example, we have CUSDC, which is USDC deposited in compound, that also counts as zero, right? Because you look at CUSDC and then you see, okay, what is that underlying? Okay, that's USDC. USDC is 100%, centralized. There's no decentralized value. You completely discount that. And so you can create this algorithm where it just tracks all of the underlying value of every single asset that the protocol can use to conduct monetary policy with, and you can get this ratio. So for example, Frax's decentralization ratio is about, give or take, depending on what assets it's currently holding today, about 50 to 60% decentralized. So that actually means that 40 to 50% of Frax's collateral, like when you follow it all the way down, is partly fiat coins or things with centralized custodial risk, right? And our goal is obviously to get that to the DR to 90+%, where 90% plus of the backing collateral is entirely from decentralized places. And so there's no regulatory risk. There's no risk of what happens if, one day we wake up and, all the fiat coins are blacklisting things and things like that.
Yeah.
So with this algorithm, we can actually do a lot of stuff.
Oh, very cool. I don't know if you've seen Preston Van Loon is working on this new project called Cryptex, and they sort of allow you to mint a coin against the market cap of crypto. So if the value of the market cap of crypto goes up, then this coin goes up in value. How does the FPI kind of come into existence? Is it sort of printed by Frax, or maybe you're not even up to there yet? And then the second question I had was, who is working on it with you? Are there any sort of big names? I saw Eric Weinstein retweeted something of yours, Sam, which must have caused a bit of a buzz.
Yeah, so I've heard of I actually have seen, I don't know it by name, but I did know the coin that tracks the total crypto market cap. What is it called again? I've seen it like a few months ago. I briefly looked at it.
Cryptex.
Cryptex.
Yeah.
Cool. Yeah. I'll
just
check
looked it up.
again.
I didn't know the name off the top of my head.
It is cool because it kind of tracks, I think, what CMC considers like the total crypto market cap, if I remember correctly. It's actually a pretty cool project. I don't know how they fully back it, but in terms of the FPI, it's actually interesting because we target the FPI of having an exchange rate that tracks the CPI. We can't actually hold like food on chain, or we can't have like custodial assets that are like off chain that like track, cars or things like that, because then you run into like the centralization and regulatory risk. So it's actually really interesting because we're in the prime position with Frax's tech to build something like the FPI, which targets an exchange rate of a consumer price index, right? Or like a crypto native consumer price index. So the things we hold in our treasury, so to speak, or the collateral backing for the FPI, they don't have to be things like food or that actual like real like gas or things like that, so that the treasury grows, if the gas price goes up or something like that in the real world. And so that's why I was thinking there's some really cool synergies to back parts of it with I.O.W and kind of expand on our cooperation together. So the FPI will hold like a bunch of very different assets as long as the exchange rate of the FPI tracks a standard of living as defined by the different indices that it's going to have by governance.
Very cool. And are you working with any sort of public intellectuals on that? Is there any like university professors or other people involved? Are you bringing sort of the meat space with you, Sam, to this FPI?
Yeah, there's been a lot of intellectual interest. In fact, Balaji is an investor in Frax, and one of the main things that really interested him was FPI and not kind of the dollar pegged stablecoin and like the Frax stablecoin. And he's really big in the space of trying to develop the stuff that he calls a flat coin. He actually thinks that like the FPI can be the first kind of flat coin which has flat purchasing power against some basket of items that holds people's standard of living constant, right? And so a lot of people have kind of gotten involved in behind the scenes, and Balaji invested, and there's also other protocols. So like Joey from Fei is super interested in this stuff, and we've been trying to think about ways to collaborate there. And I think it captures a lot of the DeFi space guys, because they know where the market is going, and they kind of believe that kind of the next iteration of this stuff is a native unit of account rather than having to rely on the dollar. In fact, I talked to Stefan from Reflexer, Amin. Those guys are super big on what we're working on, and they're kind of working on the same thing with Rai, except that I think they are working on it from kind of like ETH pure angle. So we're all kind of working together on it behind the scenes. So it's very, very exciting.
That is super exciting. I mean, evangelists recognize evangelists, right? It seems like. I know that your stance on Bitcoin is that it can't really, ever be a currency due to the fixed supply. What do I do if I'm looking to avoid the like long tail inflationary risks associated with me working 30 hours a week and my money is not growing in line with the inflation? Like why can Bitcoin never be a currency from your point of view?
Yeah, I mean, I'm a obviously super big proponent of ETH and Bitcoin and everything. It's kind of difficult to be bearish on Bitcoin when today we're talking it's literally at its all-time high. And so I think like Bitcoin is an incredibly good investment. So to be completely clear, and also ETH and the thing is though that I think more and more people are starting to understand is an investment is exactly the opposite of a currency, right? Because a good currency, you can do accounting. You can use it as your unit of account because it keeps your standard of living the same. It can buy things that are valuable to you, like food, rent, electrical costs, gas, and everything that humans actually need across a longer time horizon than Bitcoin. Bitcoin will go up, it'll come down. It's good to hold in the extreme long term, but if you have all of your money in volatile assets, unless you have extremely high capital and basically have a lot of value that you're basically completely well off, you want to have some amount of stability in parts of your portfolio, right? So I'm not saying people should sell Bitcoin for FPI. In fact, they should have a lot of good investments in ETH and BTC and all of these things, but they should do their accounting in something that keeps their standard of living the same. And everyone does that with dollars for everything, right? And so I think that having a native unit of account in crypto to be able to do that is extremely important. That's the main thing. I think that there's a lot of BTC maxis that say everything is going to be denominated in Bitcoin, and then there's a lot of ETH people that say things will be denominated in ETH and stuff like that. But I actually think that ETH and Bitcoin, as well as stuff like I.O.W that are reserve currencies, backing a unit of account is more useful, right? I think that people being able to take loans in something that's stable and knowing that, for example, they can repay a loan in FPI is actually much more useful than taking out, for example, a loan in Bitcoin and not knowing that if you're going to owe like 500K per Bitcoin if Bitcoin keeps growing in the next few years, right? And that's also why you see people don't take out a lot of loans in Bitcoin, right? Everyone takes out loans in dollars. Everything that happens on chain in the Rari fuse pools, on Aave and Compound, everyone's taking out loans in dollars because they know about what kind of purchasing power they're going to have to repay, right? And that's really important. That's why people don't borrow Bitcoin. They don't borrow ETH as much. They actually borrow dollars against it, right? And so the FPI can be the thing that they take loans against their Bitcoin and their ETH.
Very cool. Thanks, Sam. So we had a question from an OMI, and it's a little bit complicated because they're pretty big brain. So our friend Wallamai says, in Coase's theory of the firm, society gets further the more things it can do without having to think about it. Even if you're not familiar with the piece, what are some peer-to-peer or DAO-to-DAO patterns that would emerge from this type of environment? Crypto has already started to disintermediate, and it has drastically reduced the cost of capital formation. What's next in crypto as artificial intelligence and crypto meet?
Yeah, that's a pretty heavy-hitting question. I think he's referring to one of my Twitter threads about talking about how a lot of kind of DAO operations and stuff are starting to, internalize a lot of the, things like liquidity formation and stuff like that rather than paying for it, right? Which I.O.W is one of the innovators in that. It's important to try to reason about where the entire industry is going, right? And so if people aren't familiar with the theory of the firm, it's like an economic idea that's like, why do corporations and companies actually emerge, right? Inside of companies, things aren't priced, right? Everyone always says, pricing information is super important and we need free markets so everything can be priced. But if you think about it, there's these things, right? These corporations where inside of them, it's not run like a market, right? You don't, like, if you work at a company, you don't go and then, if you're a developer, you don't try to bargain every tiny little thing that you do. Or like if you have a secretary, they don't try to like price what it's going to cost to book a meeting or something, right? And the interesting thing about the theory of the firm, and if you haven't read it and stuff, is like, where's the boundary, right? Where like the market actually stops, right? And like a corporation begins, right? Where market pricing actually stops occurring because it's more, it's more efficient to do things internally and produce things internally without market pricing mechanisms. People usually don't think about that, right? They think, oh, like the market price of stuff is super important. The whole like communism pricing issue, you can't have a centrally planned economy because you don't know what the value of everything is, which is correct, right? You can't have the entire world not have prices, but you have these units, these firms, these corporations everywhere, where inside of them, there is no market activity, right? People are just cooperating together to produce things. And I think what's really interesting is that's where crypto is going in DeFi 2.0, right? That's kind of my thesis of like every protocol will have these things that they do really efficiently internally, such as for O.W, providing liquidity against itself and other assets and kind of producing like a reserve currency that's backed and not pegged for tokamak, which we were talking about, producing liquidity against different pairs and stuff like that, rather than having to incentivize farming and things like that. With Frax, our thesis is producing monetary policy internally, right, amongst FXS holders to be able to stabilize stuff like Frax and then later the FPI, like an endogenous stablecoin. I think what I'd say the answer to that question is, as more and more stuff becomes, blockchain native and there's more complex market behavior on chain, you'll actually get more and more kind of DAOs or like firms that specialize in certain activities, right? And it's just going to get more and more interesting because there's going to be more things produced on chain and basically you won't have to pay an exorbitant fee to incentivize them, right? You won't have to have farming for liquidity with like 1,000% APY and things like that. And when those things happen, you can actually interact with the different DAOs and protocols directly rather than have to interact directly with market participants like farmers and stuff like that. So the people that kind of are developing stuff in this area, I think are kind of the innovators and trailblazers and like those are the protocols we want to work with, right? So that's why we're super excited to work with Olympus, with tokamak. I don't know, do you guys have any kind of up and coming protocols you guys see as well that we didn't really talk about that are kind of producing things internally at a much more efficient rate? Maybe stuff that I haven't actually even seen myself.
Oh, yeah. I was looking at Phase new thing, which is sort of liquidity as a service. And they're like, here is the new thing. And I was like, oh, okay. Like, that's like a AMO as well. Everything I see in terms of the money printing just comes back to be like a sort of just an expansion exercise into a different market. But I saw you did a partnership with GMX, but there wasn't any details. Maybe that's some alpha you can leak to us, Sam.
Yeah, so GMX is on Arbitrum and L2, so they're part of our strategy of integrating stuff on L2, and a lot of what Frax is doing is kind of trying to expand as quickly into L2s and other chains because we have, like we were just talking about, we have an advantage of being able to expand the Frax supply and move into these different networks without having to put up costly farms and without having to, pay a lot of APY just to get a few $1 million of like liquidity and things like that. So GMX is going to be our first Arbitrum partnership, and so be on the lookout for that. And there's other stuff we're doing with. We're developing some AMM stuff with zkSync and Starkware. That kind of stuff is more complicated because the way that we have to actually write the zk proofs and things like that for Starkware is totally different. But we want to be the first stablecoin on a lot of these L2s that I think they're the future. I think the zk rollups that are coming are the most important kind of innovation in blockchain space in probably the past 2 or 3 years, to be honest.
Very cool.
Yeah, 100%. I mean, with the introduction of FRAX v3 soon, and also obviously the upgrading governance, even though crypto has an extremely good governance participation in, if you compare it to kind of traditional corporations, what is kind of the next leg up in governance? How do we kind of reduce, voter apathy? And, is that kind of through gasless governance? What are your thoughts? How do we kind of gamify the governance?
Yeah, like I think it's this kind of thing where we formalize what's going to actually be deployed, right? And so, for example, think of like curve governance for gauges and stuff. It's extremely active, right? Like you don't want to forget to vote on like a gauge and then not have your weights for the next week or something, right? And like tokamak, like we talked about, is extremely active to the point it's almost like a movie and competition between the reactors and stuff happening in real time, right? Olympus DAO governance is one of the most lively things we've seen. The boring governance, like, oh, like there's a snapshot vote for like this parameter and like, does anyone want to like vote on it? And if you do or you don't really know if your vote matters or, like why it's even happening or things like that. Those are the DeFi 1.0 things that we have to kind of get rid of, right? We want to formalize ways where people know if I'm voting, for example, on this AMO, right, for Frax, it's going to print money here, right? And it's very clear, it's very formalized, right? If you're voting on like a curve gauge, it's going to increase the, inflation rate of CRV rewards into that pool. Or like when you vote on like I.O.W, the next asset to intake into the treasury, you're voting on exactly what is backing the reserve currency of DeFi, right? And getting rid of the boring stuff where no one knows if their vote matters, right? If you don't know what it'll do, if your marginal small token holder here will actually do anything. That's the way to actually formalize capital deployment in DeFi 2.0 is, once that stuff is more formalized and done, I think that the voter participation, the governance participation, and all of these things will probably be exponentially larger than stuff like compound voting for like a new asset, which is like a lot of VCs or like 10 different people, and that if you vote, it's not going to really do anything, right? Those are the kind of stuff we have to change and make more formalized.
We want to be conscious of your time. Obviously, we've gone a little bit over here, but let's briefly touch on kind of like your stance from a regulatory perspective. Like, what do you see as the future for stablecoins? Do you think, and then also for DeFi protocol founders, do you kind of see increased kind of people moving out of the US to kind of avoid some of the gray areas? And do you kind of, how do you even regulate a decentralized system? Do you think it can be done properly? And how does the DeFi industry kind of communicate with regulatory bodies and governments? How can we kind of put our best foot forward?
Yeah, I mean, I think that there will be a lot more clarity in the next 12 months from regulators in the industry, because they can't ignore it, right? It's like a $2.6 trillion industry. But I think if protocols are sufficiently decentralized, and the definition of that doesn't necessarily mean they have to be totally anonymous, but they're sufficiently decentralized in the sense that it's not decentralization theater. And I think I think it's Gensler's own terms there. It's actually decentralized so that it's not managed by anyone. So think FRAX v3, right? Where it's like any token holders will just totally decide the monetary policy, right? From then on. I think it's those kinds of fully decentralized protocols. There's no real, way to actually shut them down, right? Think of Ethereum or Bitcoin. You can't actually shut them down, right? The other thing that's really important to consider when it comes to stablecoin regulation specifically is that even if the collateral is, fully decentralized and things like that, like we talked about earlier, if you're still pegged to the US dollar, you're still passively following the Federal Reserve's monetary policy, right? And you could argue that the peg is not decentralized, right? You could argue that the thing you're using as your stability, your unit of account, your definition of a standard of living is actually whatever Jerome Powell considers that, right? And that's not decentralized, right? And so that's the other thing, we're trying to solve with the FPI. I think I.O.W is also trying to, have a real answer to that. And I think people forget that the peg of a stablecoin should also be something that's endogenous to crypto, right? Something that we create, we define as, a stable unit of account. And that's kind of the vision with the FPI. So with regulatory stuff, I think the most important thing with stablecoins is don't forget that the peg itself is a point of centralization. We have to try to actually redefine that as well.
Yeah, I think what better protocols to work on that than the ones you've mentioned today. I mean, I have kind of one final question. I mean, we're actually doing like a full circle here. We touched on Dubai in the beginning, but you just come back from Dubai. What is your kind of favorite crypto conference meetup in recent memory? And where are we? What's the location for FOMO 4? Where are we setting that up?
So I've traveled to a lot of different places, in my time in crypto before the pandemic, and now, after I went to BTC Miami, I'm unfortunately missing out on ETH Lisbon, but I think my two favorite places are probably Singapore and Dubai. Dubai was a fantastic time and a great place. So I think either somewhere in Asia, so Singapore would be a prime location, or Dubai is fantastic. So I definitely think those would be the top of the list for me. I'd love to go to FOMO, like in physically either in Dubai or Singapore, or maybe somewhere in Europe. I mean, there's a lot of ETH stuff, is ETH Paris, ETH Lisbon, but maybe we could do somewhere a little bit farther away from both Europe and the US.
Yeah, maybe Mark and I can advocate for Australia. I don't think many people are going to travel down there, but we'll see what happens.
We don't want it in Australia. We want to go
No, I
overseas.
actually love Australia. I've never been there, and I was invited to a small like crypto event back in 2019, and I really regret not going. So hopefully, actually, Australia would be great. I'd love to.
What are you talking about, Mark? Where are you going?
No, it's great for everyone else. We don't get to travel anywhere though. You're definitely welcome to, we'll host you when you come down, Sam. We'll take you around, show you the sights.
Yeah, we'd love to.
Thank you.
Yeah, I think that's it for today, Sam. We really appreciate you taking the time out to join us for almost an hour and a half now. Where can the Ohmies and anyone else who's listening find more about 1v3, and where can they find you on socials, and if there's any other articles or any other recommendations for content that you recommend, we can always put in the show notes as well.
Yeah, of course. I literally, if I'm not asleep, I'm, or I guess, momentarily at a conference, I'm always either on Telegram or Twitter. I like to get a lot of my, philosophical thoughts on Twitter, and I'm always available in the Frax Telegram group, at Frax Finance, same Twitter. And, always feel free to reach out to me. I'm super, super available, and would always love to talk and be back and also talk at FOMO. So thanks so much for having me, guys. It was great.
No.
Yes, I can confirm Sam is very accessible. You can go onto the Telegram, and more likely than not, your random question about Frax will be answered by the founder himself.
There you go. What better way?
We'll catch you with news of the week. Next week, we've got Twitter Spaces, we've got Agora TV coming up, and the Sound Bank. And if you want to keep up to date, make sure to follow us on Twitter at Olympus Agora, and to join the Discord and react in resources to get access to the Agora channel. And we'll be waiting there to answer your questions and for you to help us build out Agora. So till next week, Ohmies, we'll see you later.
See you guys.